All right. Hey guys, welcome back to We Talk Money. Today we've got a really special episode because we have our good friend and another crypto OG, Rocky, AKA Cryptohustle. Rocky, welcome to the show, man.
Thanks, Chris. Thanks. Good to be here.
Yeah. So, I wanted to bring you on because obviously you've got a long history in crypto and you've got a deep understanding of really all aspects of the crypto ecosystem. And so, the schedule for this show is we're going to talk a little bit about Rocky's history and some of the top lessons that he's learned as an active crypto trader and investor. And then we'll jump in and look at some markets and then cover some really important news and developments that's happened since the last show last Friday. So, Rocky, why don't we start with this, man? If you want to just give us a little bit of history about like when you got into crypto, what made you jump into this space, and I guess what your experience has been and some of the top lessons that you've learned as an active trader, having been in this since really the beginning of exchanges and since there was really any liquidity in the space.
Sounds good, Chris. Yeah, so crypto is it's definitely an exciting and interesting world, and it's been very interesting to watch things develop and all the good, the bad, everything.
So when did you get into crypto initially, and what was the spark that got you in?
So I first heard about it in 2012. A buddy of mine had reached out to me. He said, "Hey, if you heard of this new online money system, you might be interested in it. Check it out, Bitcoin." And at the time, before I got into investing and finance and crypto and tech, all that stuff, at the time I was kind of really looking for alternatives to the global financial system. I'm a lot more balanced now in my worldview. At the time, I saw a lot of things as very black and white, and I felt like the entire fractional reserve monetary system was just one giant Ponzi scheme. And I was like, is there some kind of solution around this? And I spent a few years kind of focusing on that and was looking at local currencies and alternatives and barter systems and all this kind of stuff, and just kind of asking myself a lot of questions about money and the system. And my worldview has expanded and evolved a lot more. It's not as simple as it used to be. I mean, the subject's very complex. So I naturally kind of gravitated towards it for that reason. So I was definitely kind of in that ANCAP category initially. But the thing is that, so I went and I downloaded it. I wasn't very technologically savvy at the time, nor was I really investment savvy at the time. So a lot of this is autodidactic. A lot of this was just very self-taught for me at a process of intensity and growth. But I tried downloading. I had some initial hurdles and pitfalls that I had to conquer. And a lot of them are valuable lessons that if you process them efficiently, you can use these as valuable lessons to make you a better trader and investor, and to be able to form prudent risk management and to bring risk management to the forefront of your mind, first and foremost, before looking at even the rewards. And my first experience was I tried to download the core wallet, and it was taking forever to sync. I just deleted it. I was like, this is buggy. I guess it doesn't work. And that was it.
Too hard category.
Yeah, too hard category, right? Like I just didn't put enough effort. Had I put in a bit more effort at that time, I obviously would have gotten a lot more reward. Then I heard about it again in 2013 during the big Cyprus bail-in, the Cyprus bubble, when Bitcoin went up to 260. It was all over the news. I was like, oh, that's that Bitcoin thing. I was like, holy crap, look at that. I went to $260, and I was really kicking myself, right?
This was really the first bubble where there was actually some liquidity on exchanges. I guess in like 2012 there was some activity, but really like the spring of 2013 is when I know this is when it got on my radar, and Travis and I had our first conversation about it. What was this? What like kind of reinvigorated your interest in it, or what was kind of the spark there?
That is what reinvigorated because before that it just looked like some kind of novel experiment. From here, all of a sudden it went from, just a novel experiment to, wow, this could actually be a viable investment. So what I'd done, I basically spent about a week obsessing about it, trying to figure out how to get some coins. And it wasn't very easy at the time. Mount Gox was pretty much the main way to do it.
Yeah.
And I let it go again. Like I played around with faucets. I still kept an interest in it, but I didn't really go super hardcore and intense into it until 6 months later, when we hit the 2013 bubble, the second bubble
Yeah. What we call the China bubble.
the China bubble, where we ramped up. Then it was all over the media again. And at this point, I was kicking myself again. I think it was like November, beginning of December. I realized that this was two opportunity costs for me, just because of my own mental obstacles on this, not being technologically savvy at the time. That's certainly changed a lot as you get into crypto, because it's a bit of survival of the fittest, and security and at least understanding the basic tech is definitely important. And I highly suggest, if anyone's new to this, that they make sure they get that part down solid before they even venture into putting in serious capital into it. But so then I set up like a GPU mining rig. I just bought some graphics card. I think I was mining Doge in the first week that it launched. So like 2014 was me just kind of learning the ropes and losing money, like a lot of noobs. I wasn't very
Yeah, we had
savvy.
this like really slow grinding bear trend where once the bubble popped from 1,000, it took quite a while to get back to those pre-bubble levels.
Exactly. But it was really only in 2015 that I decided that I was really truly going to make a career out of crypto. And I basically quit everything, and I didn't just work full time, and I worked double time.
Yeah.
And I knew there was an opportunity. I knew there was an opportunity because we'd done a full retrace down to pre-bubble levels. And I knew that I didn't know how long the opportunity would last, but I had a very strong conviction in the Bitcoin market cycle, and that it was just a matter of time till we broke the all-time highs. Obviously, nothing is guaranteed in the markets. There's always a risk. I could have been wrong, but I had conviction. So I decided I needed to go double time into this. I needed to put everything. So day and night, I was focusing on this, hustling. And I was basically, my goal, the name of the game was to accumulate as many Bitcoin until we break the all-time high and start a new cycle. And so this is where I started to really hone in on trading. And I was just basically making Bitcoin as many income streams as possible. Things just got better year after year. My net worth and everything just kept growing year after year, obviously with the markets, but even just my strategies kept getting refined year after year, right?
Yeah.
It just kept getting better and better. And I'm almost at a point of like portfolio management now, right?
Yeah.
Where, I've built up a certain amount of capital, and it's really just about managing and allocating that capital. And that's usually a lot slower moving, right?
Yeah.
I'm looking at more like long-term investing / position trading, but leveraging market cycles, not just in crypto, but in stocks or anything for that matter. Buy low, sell high, try to buy in capitulation, accumulation. Dip buying is kind of my specialty. I've honed in my strategy, what works best for my temperament, my personality.
Yeah, you've become kind of well known for really nailing bottoms. Like I know you got on this latest dip in the community, you were buying in what, like 4,100, and anytime the market panics, it's like you're always there, like right at the lows. It feels like.
Yeah, that's kind of like I feel like a surgeon, and that's when the markets are bloody. I'm getting called. I'm on call, right? It's like I can enjoy my life, and I'll shift things around in the portfolio, and it's active, but a lot of it's passive too, because trends take time to develop, and maybe buy some passive income or have some passive income in various sources. But when the markets are dump, I always have I keep some liquidity available just for dump, specifically only for bounce plays. It's like you have the long-term holdings, and if you get a good enough price in accumulation zones or in capitulation, that's great. You've hit the reset button on a market cycle, and you can, that kind of takes care of itself. Maybe you take profit in the highs if you see some parabola here and there. but it's really just making sure I have liquidity available for any major dip so that I'm never caught off guard, so that I don't focus on the
Yeah.
paper drawdowns of paper drawdown on the profit of longer term holdings. I focus on the immediate opportunity and the profit that can be made on the bounce play before the market hits counterforce and jumping in the fires.
I think that's such a great mindset to approach it with, right? And it's different than what most people do. Like most people, they're not thinking ahead of the game like a chess player. They're just looking at price and going, holy shit, it's dumping. I should dump too. Where what your mindset has taught you to do is you do the exact opposite of that, which is you prepare, you have fiat on an exchange, and you are prepared, like you said, a surgeon on call for when the market does dump and everybody's panicking. You take the counter trade of that, and that's where there's a lot of profit potential.
Yeah, I view like any other market. If I was, let's say you're in the market to buy yourself a sound system, and there's a particular model of sound system that you really like, that you have your eye on, and then all of a sudden you see 70% super sale at the store on the sound system. You naturally, makes logical sense, you would go like 1 day only, 1 week only sale. Naturally, that would be your main focus. You would go and you'd make the time and you'd buy it, and you'd get it at a 70% discount.
Yeah.
But a lot of people in the markets, they don't take that same mentality. They look at the markets and it's like 70% discount on sound systems. And then someone looks at that and like, holy crap, sound systems just dropped 70%. I better go liquidate and sell mine.
Yeah.
Right? I'm going to post mine on Kijiji and try to like compete with the 70% discount on the market. Naturally, my sound system must be garbage. I guess it's not working anymore because someone's having a 70% sale, right? So that you see the kind of the illogic of the markets where it dumps. Suddenly it's like, 2 months ago when Bitcoin's in the highs, everyone's like, oh, it's the future, it's this and that. And then at 4K, it's like, it's dead, it's failed, it's a Ponzi, it's a this, it's a that, it's and then the trolls come out from who aren't in crypto, have been trolling it, the Nouriels and the Peter Schiffs of the world since 2012, who are salty as hell for missing out, come out and they blow their trumpet, which is the ultimate counter indicator. And then like CNBC comes and shills it at the highs, which is the other counter indicator. And it's like, there's a lot of market sentiment packed in there too.
Yeah. And I want to back up and just talk about like your evolution as a trader and kind of really just look at the early days from like 2013 to 15, because I think there's a lot of good lessons there. And one thing that really stood out was how you talked about how you moved from a basically aggressive accumulation, right? Like in the early days, you were new to investing, new to trading, and you literally put your money where your beliefs were, which was in crypto. And you said, I'm going all in with my capital, my time, my effort. And then as you develop, and I've experienced this too, and Trav, I want to kick it over to you too, and talk just about the progression that you go through, right? Because in the early days, and for anybody that's listening that has like a smaller account, or you're just getting started, or you're trying to build wealth, like you go through this progression where you go from aggressive accumulation and you're like, I want to do everything I can to accumulate as much capital as possible. And then once you get to a certain comfort level, then you go, okay, I'm going to take this capital and I still want to grow it, but I'm going for the bigger goal here is preservation and not having massive drawdowns, right? The more money you have, the more a 50% drawdown in that account really hurts, right? And so through that, you move into diversification, and I know Travis has gotten you into the stock market. He's pulled you over to the dark side, and you've had some great trades this year so far. Trav, I don't know, what do you think of that progression and just that mindset?
Yeah, I think that's generally right. I think, we all have a tendency at the beginning to try to aggressively grow our capital base. And sometimes that, that often leads a lot of people astray. It leads people to, Wall Street bets type of stuff, and looking for the highest risk, highest percentage type of gain stuff. And I've talked a lot about that in the past, and why I think like the compounding approach is so powerful. And so, at the beginning, like making mistakes is actually in some ways helpful, because if it doesn't like take you out of the game forever, it's really a really good learning opportunity. And, people are going to typically come to investing with a smaller capital base at the beginning, and that's okay. Really what you should be aiming to do is not necessarily like grow your capital at the max rate as possible, but to grow your learning. So that's what I tell a lot of like beginners is like, just be like a vacuum for information and try to like understand the jungle a little bit better, every week, every month, invest in books or online courses that are like high quality, things like that. Having a mentor helps a lot. That's really what helped me. So those kinds of things I think are crucial. But yeah, generally, like as you grow and you get larger and you get smarter, you realize like the compounding approach, especially when you get to a solid, larger capital base, is really the way that, great investors do it. Like people like Warren Buffett, who become the, wealthiest person alive and things like that, or one of the wealthiest, right?
Yeah.
And a lot of those,
to your point, impatience really gets in the way of people doing it the right way. Like if you go too aggressive in the beginning days and you blow out your account, it's like you didn't survive. You can't stay in the game.
Yeah. Yeah. And there's a balance here between capital preservation and capital growth. There always is. And so you're looking for smooth growth over time, smooth, consistent growth over time will actually tend to produce the greatest long-term results. So that's my game. And yeah, I mean, that involves, prudent risk management and things like that. It doesn't mean you have to be like super safe and you're like over diversified and you're, in 80% allocation to government bonds. It doesn't mean that either. Like we definitely take some spec plays, and Rocky's been in on a few of those with us lately, and they've, thankfully done pretty well. So that's, it's fun. It's still fun. You just have to be like a little bit more calculated about the things that you're, doing with your trades.
Yeah.
Yeah.
And one thing I'm a big proponent of is like making the big mistakes with a small amount of money. So to your point about like learning early on, it's like, absolutely, like don't go and bet the farm while you're still in that education phase or the skill development phase, because you're going to make all the mistakes. Like we've all made all the mistakes, from stuff as simple as hitting sell when you meant to hit buy, to emotionally capitulating, and like all the things, right? Everybody at some point is going to make all the mistakes. So why not do that with a small amount of money at first?
Yeah, for sure. And fortunately for me, when I made my mistakes in 2013 and 14, or the majority of my hazing at the beginning on the front end, I was pretty broke to start. When I started this game, I was fairly broke. So the tuition cost for me, even though at the time seemed like a lot of money, was really just kind of spit in a bucket. So I'm almost kind of grateful for that. And so I completely agree. We always tell folks, start off with a small amount while you learn the ropes. Maybe some people come into this industry or into any investment with capital to start, and they're not broke. And so that cost can be a lot higher. They have more to lose, right? It's a lot easier to be hardcore and all in when you don't have much to lose to begin with. You're pretty much only looking at upside at that point, versus you've already have an established life and things and investments or whatever, savings, and blow it all and end up bankrupt because you just dived into the pool without checking to see if there was water in the pool first, right?
So I guess it's kind of like, what's that guy's name? David Portnoy, what's his company's name?
Barstool Sports.
Yeah, Barstool Sports. He's just been losing millions on day trading, but I get what he's doing. It's like a publicity stunt, right? Like sports right now with the virus are basically dead. So he's like, all right, well, let me get a whole lot of eyeballs by just losing a shit ton of money in the markets.
That's hilarious. That's funny.
Yeah.
And just because I went hardcore and all in and full on into it and it worked out for me, doesn't necessarily, I would almost say maybe 90% of people who do that, they'll probably lose initially, right? And it's not to say that, why? I think people lose because they give up. I think I recall one saying, success isn't really determined by not failing. It's how much perseverance you have despite failing multiple times, multiple obstacles. Can you keep persevering? And there's tons of obstacles in crypto. There's tons of reward, but there are tons of obstacles. Now there's smart, there's intelligent perseverance. You could be stubborn and stupid too. And let's say one were to be stubborn about BitConnect, which is obviously like a failed Ponzi scheme. You have to have the right strategy and a little bit of intelligence behind that perseverance. It can't just be stubborn, stupid, and just being, because I've seen people get wrecked being stubborn, trying to succeed at something that was just a failing model, period. That
you still have to be right. You have to put your chips in the right place.
Exactly.
And that's why I say, like, the first goal in investing is to survive, right? Like, you have to learn to tread water and to not get eaten by sharks first. And then you can worry about growing wealth. But if you do stupid stuff in the beginning that permanently takes you out of the game, then it was all for nothing, right? So even if you go quote unquote all in on something like you did, it's like you have to be right, and you have to make decisions that even if you do lose money in certain areas, which you will, like you lost money getting scammed. I'm sure you had some drawdowns in your investments and your trades initially. Like, just don't do anything that's going to permanently remove you from the game and make you have to go work a job that you hate, right?
Yeah, and I'm very, very grateful for those mistakes and those lessons early on, because it made me very prudent with risk management. And when anytime I would see serious money on the table, because of that, I would often cash in a big chunk of my chips and diversify into other things. And as a result of that, there are some people who made a lot of money in 2017 who lost it all because they didn't cash out hard profit. Whereas I was very prudent about doing that and diversifying. And so that, I think that those early lessons on risk are very valuable. So if anybody's listening to this, and if you've made mistakes and lost money, but you're still here and you're still moving forward, just know that you can turn that gold. You can do mental and emotional alchemy with your own personal development and growth to refine your strategies so that your risk management just gets that much tighter. Because if you have good, tight risk management, but still take calculated risks, not only can one generate income or wealth, one could also preserve it as well.
Absolutely. So let's go ahead and kick back into the charts. One thing I wanted to share was this email Travis sent to me. This was from April 2013 when Travis and I had some of our first, I guess, like email exchanges. And I know we were talking about Bitcoin over beer and stuff, but Trav actually had a really good read on Bitcoin's potential. Granted, you were off by an order of magnitude of what could possibly be the upside, but I thought this was super interesting. You know, I had a friend hit me up during this first bubble that we were talking about the day before it crashed. He was like, hey man, you know, like Bitcoin was here at like 250 or so. And he's like, hey, what do you think of this Bitcoin thing? And, you know, a lot of people are starting to talk about it. And I just quickly glanced at the chart and I'm like, dude, this is parabolic price action. See how like the last 3 days were really starting to speed up prior to the prior trend. And then sure enough, like the next day it crashed from 260 down to like 50 or 60 bucks. And then I sent Trav, I was like, who knew this would crash, you know, just a few hours after looking at it. And then Trav said, yeah, it's pretty wild. I don't know, Trav, do you want to like give some color as to what you were thinking here?
Yeah. So I think Bitcoin had come on my radar sometime that year, in the past year. And then, you know, I had been thinking about it in the context, you know, I'm working at the hedge fund at the time. I'm thinking about global financial markets all the time, the Fed, you know, monetary policy and all that. And so it definitely intrigued me. And I was thinking about all the potential implications of it. I would say overall, not super bullish on it, but I could see what the potential might be. I thought that there were some problems with like what was going on in the black markets with how people were using Bitcoin at the time. But I kind of laid it out in this email. I said, yeah, you know, it's pretty crazy. Like basically there is an upside case here if you think that it can, you know, garner a fraction of the global money supply, whether that's through just like black markets or something else. And I think I said here, like, so, you know, Bitcoin, the money supply, Bitcoin value could expand 75 to 100x. So, you know, that was based on just like a fraction of the M1 money supply if Bitcoin could ever, you know, get market share. And what's funny about it is like, so I could see the potential asymmetric upside of it, but I was actually, like you said, off by a factor, like an order of magnitude. Like from that price, from the $60 Bitcoin price, I think the potential upside is probably 1,000x from that level. So it's, like, it's funny when there's probably not a lot of people at the time that identified that type of asymmetric upside. But I was still way off, and I was still way too bearish about the long-term potential. It's funny to think about.
Funny how 100x is bearish, huh?
Yeah.
Yeah. This reminds me of like trading Ethereum at $1 and then thinking we were geniuses at $15. So I've almost like thought about getting like a quote for the wall or something that says, never underestimate what crypto can do, because you never know how big this stuff could get.
Yeah, absolutely. And that's just, further proof too. This was only 6-7 years ago when we were emailing about this. And so you think about what the world might look like in just 5 or 10 years, and it can be drastically different than the way it is today.
Yeah.
And we're always, especially if you're a trader and you're focused on really short-term trades and swings, you may be missing the forest through the trees. That's why I like to think I like to look for my long-term stock holdings, stocks that could be very, very different from what people think it is today. And so some of the stocks in my portfolio reflect that. And sometimes these stocks go against me 30, 40% in the short run. And it's really about understanding like, what can this be in 5 or 10 years that can deliver like the truly massive returns. And so that's why I am a medium to long-term investor, because those are the types of returns available. If you're a great trader, you can be consistently making money in short run trades. But for me, bagging those multi-bagger, potentially, 50 to 100x investments are like the life-changing things that I'm trying to go for.
Yeah.
It's the catch-22 about the markets is like, you can do whatever you want within the rules of the markets, right? Like you can choose to be a short-term scalper. You can choose to be a longer-term, value investor and look to compound over time. And like, I think, Rocky, I want to ask you what you've seen, because you've helped mentor a lot of people at this point. But like, there's this misconception that I see with new traders that come in and they think they have to be hyperactive to build wealth. They're like, well, I'm starting with a little bit of money, so therefore, if I want to turn that into a big amount of money, I have to do a whole lot of shit. I have to be in and out of these markets. And that may or may not be true. In my experience, it depends on, it has to be the right market at the right time. You have to have the right competitive advantage. Like if you're trying to day trade the S&P 500, you're going to get your lunch taken today because algos drive that stuff, right? Rocky, what's your opinion? Because I know you've gone through a progression of a trader where you've been super active at times and you've been longer term at times. Maybe what's some advice you'd give to somebody who's starting off or just really trying to grow their accounts?
Absolutely. There is a progression. And I think a lot of the new traders / investors who come in, they think if they're doing more and they're keeping busy, that they're going to produce more profit. Because the thing is like in other parts of the economy and business and such, if you hit the grindstone and you put in the hours and you have the right strategy and you hustle, oftentimes you can stack more money that way, right? But oftentimes with the market, sometimes the opposite is true, where if you let things take its course and you just wait for the best conditions that's conducive to your strategy, one could actually make a lot more money passively than actively. But I think it's good for new traders and investors to do that on the front end, because they need the experience in the markets. They need to experience what it's like watching these dumps on the hour chart and feeling their emotions and the roller coaster ride of the market and being there in the trenches and whatever. And they need to just experience those lower time frames. I have a good friend who's recently got into crypto, and he's like obsessing about the whales and the 1 hour chart and all this stuff. And I wouldn't necessarily discourage anyone from doing that if they're new, because it's more hours in front of the chart. And as a result, subconsciously, you're going to process more of the market behavior through experience. And then through that experience and feeling your own emotions, stuff like that, then you can kind of develop and work on your own emotional intelligence with the market. being able to sometimes counter trade your own emotions, to be able to recognize greater market sentiment based on the pitfalls that we go through as novices, and so on and so forth. But I feel like through experience, what tends to happen, and this isn't always the case, but it certainly happened with me, where I started off, I was trading very actively on smaller time frames, taking lots of trades. Whereas now I'm definitely much more in the Travis camp right now, as far as just being more on the investor side, right? Like still being active at the key opportunities and moments, especially when you've got a good deal on stuff. But I've just really learned to be patient, and I've learned that a lot of money can be made if you hold at the right times, right? If you buy at the right times, hold, and then make sure to take some profit, perhaps scale out. And there's a middle path. It's not like another thing a lot of noobs do is it's like an off-on switch. They're like all in, all out, all in, all out on these trades, right? Whereas really one could like average into a trade, let's say an accumulation or a dump, and one can scale out into parabolas or local tops, and then perhaps re-add on dips. And you can really, it's almost like you're really finessing the market, but market conditions is really important, because you have to figure out a strategy that works, but not just figure out a strategy that works, a strategy that works for you, because we all have different personalities. And, one person might be a developer who really loves running automated bots and algorithms, and that's their niche, and they're obsessed with that. Or maybe another person's doing arbitrage all the time. Maybe some people really love the scalping. They want to be there 10 hours a day, feeling that rush or whatever. If you're good at it and it's consistent, it shouldn't be a rush, really. It should just kind of be routine.
I like the idea of, and Chris talks about his, multiple capital buckets and things like that. Like, you don't have to be, you can sometimes have multiple strategies. Like most of the stuff I'm trying to do is a little bit longer term, but I'll take, opportunistic trades. So there are times when I'll do a quick swing, and when I see a really good reward to risk setup or something like that, or I see something interesting, maybe there's a weird arbitrage that I know of that can be taken advantage of or something like that. So, like you said, I'm opportunistic about it. I don't force myself to try to trade all the time. And there are plenty of days where I just sit back and kind of watch how things are developing. And it feels weird to like not do anything, especially if it's like, 2 weeks or 3 weeks of literally making no trades or no changes to my positions. But sometimes that's the best thing to do, is just sit on your hands and watch.
Yeah. And I think one of the worst things somebody could do is like back themselves into a corner by giving themselves like a title, like I'm a day trader or I'm a hodler. It's like, why not go where the opportunity is? Right. Yeah. And one of the biggest mistakes I've made as a trader is trying to basically get blood out of a stone for a strategy that was no longer working. Right? Like as traders and investors, we have to constantly be evolving and looking for new opportunity. And if you're like, no, I'm a BitMEX scalper and that's all I do, or I'm just a hodler, right? Like if you take that position and back yourself into that corner, you're going to leave a lot of money on the table. Why not approach it from like, I'm an opportunistic person where I know how to properly allocate capital. I have multiple buckets. Over here is my hodl category. Over here is my short-term trading opportunities when a high probability trade comes along. Because the other problem is if you're like, you put on your day trader hat, and this is where I've made mistakes in the past, is like, okay, I'm only going to day trade. And then what happens if the markets are not the best market conditions for day trading? Well, you're going to have death by 1,000 cuts. You're just going to have drawdowns because it's going to be like win, lose, you'll just get chopped out. Or if you are only a hodler, let's say what happens if you're holding, you buy in 2015, you feel rich as hell at the top of 2017, you don't take profit, then you see your net worth get cut by 2/3. And then you're like, I can't take the pain. And where you thought you were strong hands, you actually capitulate and sell the low, right? So there's so many mistakes people can make. And I think a lot of them come from people defining who they are, or like backing themselves into a corner with I only do this.
Absolutely. It's like surfing, right? You can't force yourself you can't force a surf, right? You can't force yourself on the markets unless you're a whale making your own waves, maybe, right? But even then, right, you still can't fight the market, no matter if you are making your own waves. The market's its own ecosystem, and it's like surfing. You basically, a lot of surfing is you're on the board and you're lying down and you're just kind of paddling and you're waiting for the right wave, and it's only at the right opportunity that you have to like time it right and then paddle on the wave and then push yourself up onto the board and then balance on it and stay on that wave. And so these waves is kind of like trend riding for me, right? This is why I love these capitulation dip buys. To me, like, these produce a lot of waves. This is like, oh, whoa, look at the conditions out there. There are some really great waves to surf right now. You're not going to go run out when it's still waters and there's,
Yeah.
try to stand on your board or whatnot. You're just not really going to catch any waves doing that. So I kind of view the markets like that, where there's like, for me, it's almost like 95% waiting and 5% execution. And whether the waiting is just sitting in cash, waiting for the right opportunity that's conducive to my particular strategy, or holding positions and trend riding and waiting for a trend to kind of feel a bit frothier, come to a point of exhaustion. Perhaps you sell into strength, or you sell when you start to see some reversal sides, or at least take something off of the table, right? So most of it's waiting. And I think, was it Warren Buffett who said, the markets are a transfer of wealth from the impatient to the patient, right?
Mm.
And this is where experience teaches us, right? Experience teaches us patience, not just in the markets, but in all facets of life. Obviously, like, the older we get, it's our experience growing up from being a teenager to young adult and, so on and so forth. As we go through that process, we grow more, hopefully. I mean, some people might not, but hopefully we evolve more. We grow as individuals and perhaps cultivate more patience, and the things that were, let's say, important to us in our early 20s or as a teenager and our worldviews at the time, we look back and we're like, wow, that was kind of crude and simplistic, and I was impatient and had all these. We just kind of mature, almost like a fine wine. And the same, if someone's going to be in the markets for a while and survive this game, then chances are there might be a natural progression that happens through experience too, and experiencing enough market cycles.
Yeah. I know one of the biggest things I've learned as a trader is, like, just looking back to when I started trading in high school to where it is today. It's like, back then my goal and my mentality was like, I have to beat the market, right? Like, the market is something to beat. And then once you understand what the market really is, it's just the collective actions and behaviors and beliefs and thought processes of all market participants. You're like, oh wait, you can't really beat it. What you can do is be opportunistic. And when something comes along that's just too good to pass up, you participate in it and you get rewarded for taking that risk, right? And like, that might sound very intangible, and it is, and it's not something that I think people can really understand until they actually put real money in the markets. Because for anybody that's ever been to the casino or, like, played poker with friends or anything like that, like, it's a very competitive thing. But I've found, like, the more you can get into the flow of a market and just be, like you said, be patient and wait for the right wave to come along, the better your results are going to be over time. Trav, do you have any thoughts on that? Or, like, what have you learned? Because again, you have a perspective that most people will never get, which is managing hundreds of millions or over $1 billion in assets. What is that like? And what mental models or lessons have you learned over time?
Yeah, I mean, I think we've talked about quite a few of them already. It's interesting because managing a significant amount of money doesn't necessarily change that much with how you approach things, especially on the psychological level. Like a lot of the stuff we just talked about, being overactive or really taking what the market gives you and things like that. Those types of behaviors, and also the learning aspect. Like, we would literally take lessons from some of the investment mistakes we made and put them on a bulletin board in our office and try to, like, reinforce, the things that we did wrong and try to get better at them going forward. And, like, even the best investment funds are going to be wrong probably a quarter of the time. And so a lot of that is the same thing that individuals have to deal with as individual investors. When I'm managing my own capital, it's a lot of the same types of things you're having to deal with, overcome, and learn. There's obviously some differences. We have access to tools that individuals don't have. You have a little bit more pressure managing significant amount of money. And so you have to be very cautious about risk management and things like that. So there's some extra things around the margins that you do at a fund that you might not have to do as an individual. But, overall, I think a lot of the same things that we've been talking about do apply.
Yeah.
But yeah, if we want to talk about specifics,
having the lessons on the wall and like shining a light on them, I think a lot of amateur or newer investors and traders will try to like push their mistakes to the side and they almost don't want to think about them. But like you said, like if you put them up and you look at them and you say, I don't want to make these mistakes again, that'll help you progress.
Absolutely. Yeah. It's really key to like keep evolving with markets and keep learning, because everything's always changing and everything's so dynamic in markets. That's what makes it awesome and exciting. But, if you're relying on, strategies or tactics that worked 10 or 20 years ago, like you're probably toast.
Yeah.
You look even Warren Buffett, right? Like he used to say he would never buy technology. And then, he's one of the largest owners of Apple stock now over the past few years, right? Like even he has adapted somewhat to, open his mind to new types of investments and things like that. So,
yeah,
but a lot of his process remains the same. And, and a lot of his things that he does as far as risk management, like he sold his airline stocks because, he has a very specific view about what his companies should do. And a big part of that involves being able to return capital to shareholders through buybacks and dividends, not having to deal with existential risk of the investment going to zero and things like that. So when that thesis changed with the airlines, he immediately got out. He didn't hold on to say, well, maybe it'll recover or whatever, right? Like he stuck by his process. And even though he took, some slight losses, for instance, he bought Delta in February and then sold the entire position in April. So he had to reassess his thesis there and was okay with taking a loss because he knows that capital that he's freed up can now go to potentially higher productive uses and things like that. So
did he sell on that bounce play or?
So say that again.
Did he sell on that little bounce play there or?
I don't think we know for sure. Like they filed, they had to file when they were still above 10% ownership. Let me just look here. I'll pull it up. They had to file that they were selling the stock in early April when they were still above 10%. But once they got below 10%, they were able to sell stock without having to file. So we know that he was selling sometime from early April on. So we don't know exactly where he sold it, but it wasn't on that bounce per se at the end of March. It was actually probably closer to where we are today in the low 20s.
Ooh, the twisted part of my brain makes me want to counter trade him and buy some of this Delta.
And that's a challenge. Trav, I think we've talked about this in the past is like, if you run a $1 billion plus fund, it's actually harder to get really high returns because you have things like this where you have to disclose positions and, moving that much capital, like people can see it and try to front run and like all the challenges that come with that.
Yeah, absolutely. Yeah, I guess, when we talk about managing a fund versus individual investments, the bar is just higher in general and the game is just tougher. Yeah. As an individual investor, I think you do get some advantages, although you don't have as much capital to be able to buy certain types of tools like credit card data or satellite images or, Capital IQ or Bloomberg or things like that. You have a smaller size and you can participate in lots of different types of opportunities, small arbitrages, things like that wouldn't be available to a big fund because it doesn't move the needle.
Yeah.
That's the fun part about being an individual investor.
So it's a lot easier to turn 1,000 into 1,000,000 than 1,000,000 into 100 million.
Oh, for sure. Yeah. In some ways, it's interesting though, because once you do get to a certain size of wealth and you become an accredited investor, you do have new opportunities brought to the table that you wouldn't get as an individual investor, especially in private investments.
Yeah.
Whether that's VC type of investments or private equity style type of deals and things like that. Even large, like commercial real estate deals and things like that. So
yeah,
yes, it's probably easier to go from 100K to 1 million than it is to go to 100 million to 1 billion. But at the same time, the large funds do have some advantages that help them, the rich get richer in some ways.
Yeah.
It's
and that's
true.
why
And then you have
I've been so
liquidity.
critical about the accredited investor rules. It's like, those are just asinine that somebody with no knowledge but $1 million can invest, where somebody who's extremely knowledgeable but isn't worth $1 million can't invest. I know the regulators are looking at redoing some of that, and I hope that happens sooner than later.
Absolutely.
Yeah, because you can blow your money on lottery tickets and gamble at casinos. No checks and balances at the casino, is there, right? Or lottery tickets. So to say that it's to protect investors, but then sell them something that's got like a near 0% chance of return. I don't know. It's hard to make that argument when they're literally selling scams.
Yeah.
Right?
Yep. Well, I think we've covered a lot so far. You guys want to talk about the markets real quick?
Sure.
All right. So,
Good.
actually the past couple of weeks in the stock market has been relatively quiet, I should say. I guess just like, or maybe quiet's not the right word, but just stable as far as price action goes. I know there's, obviously still a ton of emotion, a ton of activity around the virus, and a lot of uncertainty there. Bitcoin, we just had the halving last week. We had a big party for that. That was really fun. Bitcoin still holding stable around 10K. Gold also continuing to break out. You can see we've got a little bit of a pop today going into the weekend. Are there any kind of key things that you guys are looking at, or any inflection points, or just anything in the market you guys want to bring up, or any plays that you've got or potential plays?
Yeah, I'm kind of watching. On the stock side, I'm watching how things are reacting to the phased reopenings and the new data that's coming in on the shape of the recovery. We did start to see some volatility last week or two. Markets are down a couple of percent this week so far. But I was expecting there to be kind of a rotation from tech to some of the recovery sectors like retail and financials and travel potentially, but it hasn't really happened yet. In fact, a lot of those sectors are still kind of near their lows or hitting new lows. So that is giving me a little bit of caution. And I think there's still obviously potential bad news out there with incremental new bankruptcies, states having problems with their finances. So it's a very complicated environment right now that we've rallied and we're up here. And like, especially with tech being pretty richly valued, it's like, I think the next couple of months are going to be pretty choppy and difficult to make sense of.
Yeah.
So I think we could go either direction, and I'm not making any big market bets per se. I'm kind of holding in with what I have, but I'm going to be watching to see if these sectors in the next couple of weeks start to actually perform better. If they don't, I think the market could be in trouble.
Yeah. I do feel like we're at a very big battle zone where we've had the big panic through March. We had a 61% retracement, and we've got, we're kind of boxed in on support and resistance on the stock indices right now. And obviously the NASDAQ is just a few points off of, or a few percentage points off of the high right now. Let's see, as of Friday, we're down about 6-7%. Earlier this week, we were, just 4% off of the all-time highs. So tech has definitely been outperforming. And, I've been really considering putting on some short hedges around this area, just kind of being patient. There's definitely a lot of indecision. And I think the next big move really, like you kind of alluded to, relies on what happens with the coronavirus numbers in the US with these phased reopenings. Like if there's another big spike, that could get really ugly.
Yeah. If the non-tech businesses out there don't recover or things potentially even get worse, then I think the market is facing a really, really challenging rest of the year. And just the economy in general. So that's why I'm watching everything so closely over the next few weeks, because if we don't get much of a recovery in the other parts of the economy that are not tech and not benefiting from coronavirus, then I think we're in a much more dangerous spot. Yeah.
Rocky, anything you're looking at?
There's a ton of action. I feel like a couple of months ago when we had the everything capitulation.
Yeah.
I was very kind of active in everything in crypto and took an active interest in stocks at the time. And just kind of, I went into, especially with stocks, because I was a lot later to the stock game, and I tend to base my longer term positions on market cycles just from crypto and Bitcoin. So I was just kind of, for a few years, I was just kind of patiently waiting to see if there'd be a nice little dip, you know, a recession or some kind of like decent enough correction where I could get in and kind of size in and start building into a stock portfolio. And so I finally got that moment and opportunity when we dumped. So Travis has an awesome list. He's like a fundamental wizard. He's got an awesome list of stuff. So I was picking through that list, and there's been some really good bounce plays and stuff since then. Like I think Upwork was one of the, you know, that's so almost turning into multi-bagger right now. Almost, I think it's like 100. I'm up at like maybe 150% on that one.
Nice.
In a couple months. So that one's
so you were
probably
buying on the pullback in March.
Yeah, that one's kind of the better one of the works. There was an interesting little arbitrage play on metals at the time during that everything capitulation liquidation.
Yeah.
Basically, physical metals are sold out everywhere. You couldn't get it, and if you could get it, it was at least 30%, especially silver was 30% over the paper price over these futures.
Yeah.
So I had spoken about that and talked about that with our group, and there was an interesting arbitrage play. It's like, I think this is an arbitrage play because I haven't seen that gap so wide before, and I think it's just people covering margin positions and just liquidating what they have to get more cash on hand, to get more dollars.
Yeah.
So I don't feel like it's I feel like this market is out of balance, and it didn't truly reflect the real genuine demand. There's even articles coming out where they couldn't even like settle futures contracts with real metals, right? Like there's problems, there's supply problems with transportation, stuff like that. But even before any of that, when I saw that massive gap between the real stuff being sold out everywhere and then the paper stuff being discounted, severely discounted, that to me just kind of smelled like free money, really.
Yeah,
So
it was definitely a great buying opportunity for gold and silver. Absolutely.
SLV was the ticker that I bought. I didn't really touch the futures, but just kind of like a fund or whatnot. So
yeah. How are you guys thinking about silver right now? It's looking pretty strong this week.
Man, so if we look, one thing we've been talking a lot about is the gold silver ratio and how we really had a breakout of historical ranges with that. So what that means is, you know, over the past several decades, 1 ounce of silver, 1 ounce of gold gets you historically in between like 40 to 80 ounces of silver. Well, what happened is gold and silver kind of became decoupled, where, you know, gold became a lot more expensive compared to silver. And the question that I've been asking myself is like, okay, is this a new range that we're establishing, or is silver incredibly cheap compared to gold? For me, I put that in the too hard category because I just don't know. I think that, you know, silver's a good play in some sense, but has it kind of lost its monetary value, right? Like has it lost its, I don't know, its usefulness as a store of wealth? I don't know. What do you guys think?
Well, I think looking at that gold to silver ratio was the reason why I focused on silver exclusively on that dip versus gold.
Yeah.
Because by looking at that chart, you know, if I go under the whole buy low, sell high, at the time, you know, that chart had spiked up, where you could see it kind of corrected a little bit now. So I was catching a multi-year opportunity, basically multi-year low that we haven't seen in quite some time. With a nice kind of like V bottom, and I was buying like right on the red candles even before it bounced, and just kind of averaged down there.
Mm-hmm.
And some of my entries were fairly close to the bottom on that. And I just felt it was really undervalued compared to gold in that, so I was more interested in that. I think the percentage gains on this bounce is a bit higher too. Smaller market cap, smaller ship to move.
Yeah.
I always just try to find the more undervalued place. And with gold, that I have gold, but I was investing in it, and you know, some of my profits, 2017, my average is somewhere in like 1,600 Canadian zone. So that's doing quite well. It broke out of a large multi-year ascending triangle. You can see that it's starting a new market cycle. It's a new uncharted price discovery territory. So I'm very happy with that position and just trend riding.
Yeah,
And
you're
so
up
that,
about 50% on that one. On
yeah,
the
I'm
Canadian dollar.
up about 50% on that one. I mean, a bit of a slower market. It took years to get that 50%, where silver is like a couple months. So that's
Yeah.
why I chose silver at the time. But I also looking at other implications with silver, like the industrial uses of it. For example, solar panels apparently use solar technology, use silver.
Yep.
And we are seeing growth in the solar industry, exponential growth, and it's a growing and rapidly growing industry. And I almost think that even with this quarantining and stuff, I think we're going to see real estate out in the country, out of the city, increase in value. That's my hypothesis. It's going to boom. I know a few real estate agents, and I've heard through the grapevine that the markets opened up recently, and places that they've had listed for years that couldn't sell out in the country or lakes or whatever, all of a sudden have offers, right? As soon as it opened up, they have offers. Because you have people sitting in their homes, in their apartments or whatever, thinking, geez, like maybe I need to grow a garden. Maybe, they're thinking about supply chain and the economy and
Yeah.
reassessing their life and all these things, and maybe getting into more of a survivalist mentality and thinking, man, this quarantine would be a lot nicer if there was some forests or some, something nice that I can go out on the walk and not just be like in a city. So I think we're going to see a push out into the country a bit more. With real estate, and perhaps in that process, some people might want to off grid a bit and have backup energy systems like
Yeah.
solar panels. I mean, I know I've been thinking about stuff like that, solar panels, and
No, that's a great idea. I guess so. Going back to the silver trade, like, for me, I was looking at more of a longer term time frame, because I don't actively trade metals. And just knowing, for those of you watching the video, I mean, silver likes to have really big boom bust patterns. And so as far as like a hedge against inflation and a store of wealth, like I've always looked at gold as a much more stable market. So I didn't take that play, but that turned out to be a great trade for you. Trav, what about you, man? Have you had any trades or any thoughts on metals?
No, but I think it's important to ask the question about the gold silver ratio, if it's still relevant, because it has been, it really has been moving out of its historical range for some amount of time now. So I don't know if you can just make the bet on the reversion to the mean in that ratio necessarily. I think it's important to ask why it's happening. It may be that it's still relevant. I do think with Bitcoin now providing some of a monetary hedge role as well, maybe silver has lost some of that cachet. So I don't think it's as easy as saying, yeah, like this ratio is definitely going to come back in line. And that means either silver rises or gold comes back down and silver stays flat or something like that. But I do think you can't ignore, like from a technical perspective, like gold and silver do seem to be performing pretty well. And so I kind of am looking at that as, potentially I may add to some of I've got a really small amount of gold and silver exposure right now. So I may look to add a little bit. I actually like Bitcoin more, but,
Yeah.
but I think,
Definitely has more utility. That's for sure.
yeah, but I'm almost like running contrary to what I usually do. Tend to be more of a bit of a value dumpster diver, but here I'm kind of letting momentum be my guide here on the metals as far as adding some exposure.
Yeah.
Yeah, because that could V-bottom into a new market cycle. Kind of, if you look at that 2008, 2009 crash on metals there on silver, that had a nice bounce play, and then it started producing higher lows and higher highs, broke out of the range, and then went batshit crazy parabolic.
Yeah. Silver had like basically twice the drawdown as gold through here. Like it peaked out around what, 20, 21 bucks in early '08. And then by the depths of the financial crisis, it was down like almost 60%. And then it had an epic rip. So it's kind of like the Litecoin, right? Like it's more volatile.
It is.
Is it as good of a store of wealth as gold? Probably not. But as a trading vehicle, like the percentage gains and losses are a lot bigger. So for anybody looking to be more active, silver might be the market to go.
Yeah, and if you want the physical stuff, I think some places have finally opened up. I think the mints and stuff are now delivering. But check out the silver CAD price for a sec. I just want to see what it's showing on the Canadian price, because to buy physical silver right now will cost you at least $30 Canadian.
Oh, wow. So the spot, I think, oh, this is US.
Yeah. So I think it's probably a little bit.
Yeah, so it's about 23.50 on the Canadian dollar. So you're paying what, 30 spot?
Yeah, so you have to yeah, it's about $30. So that's how much the markup is. And
yeah,
that's still pretty significant. It's showing there's a lot of demand and not a lot of supply.
Yeah, a 25% premium is terrible. I know locally here in Texas, I mean, we can get anywhere from like 3 to 5%. If you can find it, right? And I agree. I mean, I've seen the supplies kind of come back too, but yeah, paying 25% over spot is crazy.
Yeah, and they're just reflecting market demand right now. They're pricing in the market demand because obviously since all this happened, the demand for metals has increased. And my personal hypothesis why I'm obviously there's a huge battle in crypto over like gold versus Bitcoin or whatever, and there's like drop gold campaigns, stuff like that. I personally see them both as different. They have similarities, but I see them both as different. I see obviously Bitcoin is easier to transfer and store of wealth with technology and all that kind of stuff, but gold's been around as a form of money for 5,000 plus years, and I can't discount that. I mean, it's probably going to outlive every other investment I have. It might even outlive Bitcoin. Who knows if Bitcoin's going to be around for 20 years?
Blasphemy.
We never know, right? I mean, things change in tech. I'm kind of just basing it market cycle to cycle and reevaluating how I feel about it in the industry every market cycle, every parabola, every bear trend, to see if there's still growth and and all that kind of stuff. But I'm fairly confident that in 1,000 years from now, gold's probably still going to retain some value.
Yeah, I don't see how it couldn't. Trav, any thoughts on oil? Oil's actually gotten a really big bounce. We've talked a lot about this in prior episodes where people thought this market was just going to die or whatever. We've got the front month contracts almost at $30 today.
Yeah. I think it's recovering pretty nicely. I think it's still in an area where it's going to create some distress for some of the industry. But I think at these levels, you could make the case that, the large scale bankruptcies may be off the table. So that's probably a good thing. I think I've seen some incremental data over the last 2 weeks showing that driving is actually coming back in some US cities pretty quickly. And I think we've talked about already how summer is expected to be a pretty busy driving season with people not flying internationally as much. So I think you could see the energy markets stay, pretty steady here as long as we don't get like a massive second wave shutdown. And so, yeah, I've been holding the energy positions I have in my portfolio. I'm kind of just sitting tight with right now, not adding, but also just looking to see if this can run a little bit further. I think we could be in a situation with some energy shortages by next year, depending on how global demand looks, because there has been a significant amount of production that's gotten taken offline.
Interesting.
And some of that is not easy to bring back on. So.
Yeah. Well, good stuff, guys. I think we covered a whole lot today. Rocky, thanks for coming on, man, and sharing your wisdom. And I know you've been an asset to the crypto community and have helped a lot of people make life-changing amounts of money. And so any final thoughts of it or advice for anybody that's getting into the crypto space or just trading in general, or anything you just want to say before we wrap it up?
I would say just study. Just know what you're doing, right? Just and be skeptical. I know when you're new, it's all exciting and you see these white papers and these projects and they promise the moon and everything seems just like all peachy and rosy, but be very skeptical because there's a lot of scams out there. There are a lot of ways that you're going to get fleeced, a lot of sharks that want to take your money. And there's a lot of experiments. There's some projects that aren't trying to take your money, but they're experimental and experiments fail, right? And so I would just say, if you're going to venture out and explore crypto and all that stuff, like we said, start off small, study. There are no shortcuts for experience. So you're going if you're completely new, as years go by, you're going to gain experience that you don't have right now. And you're going to fully realize and understand things you don't understand right now at the moment. And you can't truly understand. We can show videos, we can show examples, we can tell you stories and by the campfire, whatever. But until you actually experience some of these things for yourself on the front lines in the trenches, you're not really going to have the wisdom that goes with it. There's a difference between, in my opinion, there's a difference between information and knowledge, right? Information is just data, right? Knowledge comes from experiencing that data. When you personalize it and you have the experience to back it up. And then wisdom comes from applying that knowledge in action. Wisdom is knowledge in action. When you have the experience from the information, you take the information, you have the experience to back it up, but then you apply it correctly. That's where you get into the wisdom category. And this is a process, an experiential process, that there really are not any shortcuts. The only thing that one can kind of shortcut into it is the level of intensity and focus you put into it. Obviously, if you look at crypto very casually and you just kind of glance at it, study it like an hour or two a week, then your process and your growth and experience is going to be a lot slower. If you do it for 16 hours a day, like I was doing, and you obsess about and eat, sleep, breathe crypto, naturally you're going to speed up that learning curve and gain a lot more experience, because there are 24 hours in a day. We're all allotted the exact same amount of time, but how we use those hours really can set us apart from how other people use those hours, right? You can get, if you want to get into the top 10%, then you really need to kind of, you need to hustle, right? On the front end. Yeah. Eventually you can kind of make it a lot more passive, but on the front end, you need to hustle. So
yeah, man, put in the work, no shortcuts for experience. And that's the path. I love it. Trav, any final thoughts?
No, I think that's a good one to leave everyone with.
Cool.
Nice.
All right. Well, thanks for joining me today, guys. For everybody watching this or listening to it on the podcast, don't forget to go to wetalkmoney.com, submit your questions. Next week, we're going to do a lot more time for questions, since we went a little bit overboard today talking about the crypto stuff, but wanted to bring you guys kind of a different angle. And Rocky certainly has a lot of knowledge to share. So Rocky, thanks for being here today, man. And
thanks for having me.
Yeah, absolutely. Guys, like this up if you get value from it. Subscribe to the podcast, and we will see you next week. Have a great one.
Take care, folks. Cheers.